to this session. I'm a partner at Shearman and Sterling, which is a law firm in the financial regulatory group, and various of my colleagues also here from the firm and the same team. This is the first of a series of 4 talks. This morning we're going to talk about the FCA regulatory perimeter, so when are FinTechs regulated? And we'll go into that in a moment. At 3:25 today we've got another session on complying with regulation, so what happens if you do have a license. And then tomorrow at 11:40 we've got a session on strategic thinking on regulatory issues. And then tomorrow at 3:25 a session on crypto and central bank digital currencies. So today we're going to talk about the regulatory perimeter, which is essentially the question of to be or not to be licensed or not to be licensed. Do you want to get a license, and how can you avoid getting one from the FCA? And when do you need one? We're going to look at this by approaching various separate sort of subtopics. So first of all, my colleague Olivia Merrett is going to talk about activities. So what sort of activities create the need for a regulatory license? I'm then going to look at regulated and unregulated products, and particularly look at things like tokens and securities. Nick Ormondroyd is then going to talk about payment services, when those are regulated, which is obviously an important area for FinTechs. And then finally, Wilf, Odgers, on my left, is going to talk about financial promotion and advertising rules, and when those can be tripped over. So without further ado, I will hand over to Olivia to talk about regulated activities, and hand over this.
Great, thanks Thomas.
Press it on.
Is that new?
You told you.
Oh. Oh. Great. So as Thomas said, I'm going to give a sort of broad introduction to the UK regulatory perimeter. So the UK regulatory perimeter is broadly the boundary between what the FCA does regulate in the UK and what it doesn't regulate. Now, to be a regulated activity within the FCA perimeter, there are 4 key elements. So you need to be conducting a specified kind of activity by way of business in the UK in relation to a specified investment. So if you have those 4 elements, then you'll be within the scope of the regulatory perimeter. So why does this matter? Well, there's a general prohibition in the UK of carrying out regulated activities without either the appropriate authorisation from the FCA or an exemption, and the consequences of carrying out without a licence or exemption are quite severe. Either the company or individuals can be fined, and you can personally be imprisoned. So if we are in scope of the regulatory perimeter, it's important that we're complying. Also, more practically for your business, if you are carrying on a regulated activity without a licence or authorisation, then all your contracts will be unenforceable, which isn't quite the business model that you'd want. So looking at the first 2 elements, that you have to be conducting a specified activity in relation to specified investments. Now Thomas is going to be talking further in a moment about what will fall within the specified investments, so I'll focus on activities. Probably crucially, the ones that you're likely to come across first are arranging in investments or advising on investments. Now these both sound quite broad, but there is quite a lot of FCA perimeter guidance to help you. So advising on a regulated activity is where you give information to a person in their capacity as either an investor or a potential investor on the merits of buying, selling, subscribing or underwriting for a specified investment. Now the FCA have said that advice has to require an opinion. So if you're merely conveying information, that's not enough to be advising. However, any communication with a customer that goes beyond the provision of information will likely be caught. Secondly, arranging deals and investments. This is quite simply making arrangements for another person to enter into investments. This does seem very broad, and it is very broad, but there are some specific exclusions you may be able to benefit from if you are carrying out arranging activities. So there are general exclusions from the general prohibition, and particularly in relation to arranging. So some particular ones that you may find are arrangements not causing a deal. So this is where your actions don't actually lead to a deal taking place. Now, this doesn't actually mean that the deal doesn't take place. What it means is that your actions weren't a significant enough part and didn't contribute to the deal to lead to it concluding. So as you can see, there's quite a fine factual line between when that may and may not happen. Also, enabling parties to communicate is quite another valuable exemption. So if you're just providing the platform by which a regulated person and investor can speak to each other, then you're likely not providing the regulated service of arranging. But the FCA have been very strict in how they interpret this. So if you do any value add at all, even if that's sort of presenting the information in a better way or checking that the customer's made their orders complete, that will likely mean that you've been deemed to be arranging. Talk more about the overseas persons exemptions in a moment. So now turning to the other two elements of whether you're within the regulated perimeter in the UK. So that is that you are performing the activity by way of business within the UK. Now, within the UK may seem straightforward. You know, we're sitting here today. That means we are in the UK. But it is possible that you could be deemed to be carrying on business in the UK, even if you're located elsewhere. And this sort of has to be assessed on a case-by-case basis. There's a number of sort of factors that we can use to help us work out where you're carrying on your business. So in the context of banking and payment services that you may be providing, we can use the characteristic performance test, which is a piece of EU guidance, but it's well accepted under UK law. And the general principle is that your activity is taking place where the characteristic performance of the activity is carried out, so where the essential supply of the service happens. So in a banking context, this has been seen to be where the account is actually located. So if you were just providing long distance services for an account in, say, Switzerland, it may be that you haven't breached the UK regulatory perimeter. Then looking at whether you're carrying something out in the course of business, this again is a factual determination. So you need to look at how much of your business is actually committed to the regulated activity, the general kind of scale of what you're doing, and whether this is something that you're doing over a continuous period of time. There is something that you're probably familiar with or have heard referred to, which is the overseas person exclusion, which has gained a lot of traction recently as we've moved into post-Brexit financial services world, although it's been around and established for a long time. This means that a firm that's carrying out activities from outside the UK doesn't need to have an authorisation, even if they're conducting regulated activities, if they're either entering into transactions through an authorised person in the UK, or if they are entering into transactions as a result of a legitimate approach. So that would be where someone in the UK approaches you to provide your services, and you've not breached the regulatory perimeter in some other way by, for example, doing a financial promotion, which is something that Wilf will talk about later. The last topic I'd like to touch upon is crypto asset activities and AML registration. Now, Thomas will talk through in a moment how crypto assets aren't in scope of the UK regulatory perimeter. However, crypto assets are in scope of the money laundering regulation in the UK. So if you are providing crypto asset activities, you need to be registered with the FCA, and then you need to comply with the money laundering regulations 2017, which have quite onerous obligations, including in relation to customer due diligence. Now, the FCA has had to reject or ask to reapply a large number of firms who submitted their application under the AML regime because they couldn't demonstrate they had sufficient systems. So there is something that you'll have to take into consideration, even if you are providing unregulated assets in the UK. In particular, we can imagine this might well be a hot topic over the next year, given the attention on the use of crypto assets to circumvent Russian sanctions. So I'm sure the FCA will be taking a close look at that. And now I'm going to hand back to Thomas to speak about regulated products more.
Thanks, Olivia. So Olivia's just gone through activities. So what sort of things that you do get you licensed? I'm going to talk more about the product. So in order to require a license, you need to do an activity, and that activity needs to link to a product which is within the regulated arena. And this has been particularly a hot topic and an area of debate for what we might call tokens, as well as for crypto assets. And to date, we don't really have a clear law on this. So the regulatory response to the development of cryptocurrency, the development of tokens, has essentially been to apply the existing traditional, almost centuries old in some cases, definitions of financial products and say, well, on the one hand it might be, and on the other hand it might not be, and it really depends on what you're doing with the product. And so if we look at tokens for starters, they start looking a lot like securities. So securities, as traditionally regulated, are shares, bonds, preference shares, debentures. And what do they look like? Well, a share is a certificate that's transferable in return for a profit right. A bond is a certificate that's transferable in return for an income stream, and the repayment of principal at the end. And so those are the traditional categories. In the UK, we also regulate debentures, which might not be transferable, but they do give right to a regular income stream. And so what the regulators have done to date is to say, well, if your token looks like one of those, so it gives you a right to a profit, it gives you a right to an income stream, gives you a right to repayment of principal, then probably it's a regulated token. It's a security. On the other hand, if it doesn't do those things, then it might not be. And so how do people make tokens not securities? One of the things people do is to try and embed a service element. So you pay some money, and that gives you an entitlement to receive various services from the company. So you're an investor, you put the money in, instead of getting a coupon, you get the right services. Transferability has been another sort of ruse, if you like. People have used it in the token space. So you can create an instrument that looks like a security, make it non-transferable. It stops looking like a security. That particular loophole is currently in the process of being closed. And so really this is turning more into a services versus money kind of distinction between tokens and securities. We also have cryptocurrencies, which are just because of their nature essentially don't fall within any of the recognized categories. If you do a derivative on a cryptocurrency, that would be a derivative, but the currency itself is generally speaking not regarded as being regulated for FCA purposes. It might be regulated for AML purposes. It probably will be. So this has been the sort of what's going on in financial regulation with FinTechs for the last, 8-10 years or so. It's been a pretty hot area. Recently there's been an announcement that from Rishi Sunak that they're going to try and create a proper framework for cryptocurrencies. That was always heralded as one of the reasons to do Brexit, was that we could actually properly introduce a category for crypto and regulate it properly, rather than saying, well, maybe it is or maybe it isn't. But today we haven't seen it. And in fact, the Europeans have been taking their own steps in that regard. So there you go. Good idea, not yet executed. So we wait to see on that. Eventually we will see crypto as a proper regulated product, both in the UK and in Europe. But at the moment we have this sort of phony war going on where it kind of is and it kind of isn't, depending, and no one's really clear about what's happening. Which is why you need lawyers, of course, who can help you navigate these things. I've gone through what is a security. People try and analogize usually to shares and bonds, but as I've mentioned, it's broader than that. We have other categories, debentures. Essentially any loan can be a debenture, warrants, so not exactly shares, but something giving an entitlement to a share can be a share, certificates representing securities. So all these things mean you can't just call it not a share and not have it as a share. There are all these sort of catch-all categories as well to navigate, which can be difficult. Outside of the sort of crypto and token space, there are other kinds of investments, but we won't go into them in detail today. On tokens, again, there's a lot of guidance. As I've mentioned, it kind of boils down today on sort of services versus contractual rights, but there are a whole variety of different factors they'll look at, including transferability, where the payments flows are. And then what you often find is people embedding a service element into what looks like a debt instrument to say it's really not a security. So you do have financial rights, but you also have a couple of added on services. And then it becomes difficult, and it's really a question of sort of what's it more about? Is this more about the services you're getting from the investment, or is it more about the money? But you can often end up in an edgy situation. Dealing, finally, if you're issuing tokens, dealing is the activity. So issuance is a regulated form of dealing. Generally speaking, companies are allowed to raise finance and they don't need an FCA license. So if you're BP and you issue bonds or shares, it's not. The difficulty in this space is that if you do something else that's regulated, like arranging or advising, that Olivia was mentioning, and then you also issue, so you're already within the FCA perimeter and then you do some issuance, then that is regulated. So you have to be a financial firm first. The idea is that if you have an FCA license and you go around issuing stuff, people expect to be protected because you've got FCA written all over you. So this becomes essentially once you've got a license for something else and then you start issuing these things, you're regulated. So a lot of this boils back to what your underlying business is and whether that's in the regulated arena. If you're simply issuing tokens to support a commercial business that's not regulated, it generally will be treated as any other form of issuance, and you won't need an FCA license. Have I confused everybody? Possibly. Okay, so that's a quick whistle-stop tour through securities and when they are and when they're not. And Nick's now going to talk a bit about payment services and when those are regulated. So just to quickly introduce that, Olivia's talked about sort of standard regulation, dealing, brokering, and things like that. And now Nick's going to look at moving money around.
Thank you, Thomas. So turning now to payment services, the main question is, what are you actually doing as a business, and does this fall within the UK's payment services regulatory framework? And before we get onto the substance of this, in terms of why you might be interested in this, if you are providing regulated payment services, you'll need to be authorised or licensed appropriately, and this can have implications for your business. For example, requirements on how you legally structure yourself, and also operational requirements such as how you hold funds. This is something we're going to be talking to in a session later today. On the other side of the coin, if you are providing regulated payment services but you're not appropriately authorised, then there's a risk of sanctions here, which we've already touched on. So in terms of the test for regulated payment services, the key idea is generally, if you're providing payment services as a regular occupational business activity in the UK, then you must fall within one of the categories listed behind me. And each of these has a different regulatory set of implications and considerations to bear in mind. You'll see it's a broad range of entities, but in short, banks have the most strenuous regulatory requirements attached to them, and as you move through payment institutions and then the more specific entities, then the requirements and the implications lessen somewhat. In terms of what is actually a payment service, and so what are the things that are going to bring you within the regulatory perimeter here? The list of regulated payment services is set out in legislation. We've put on the slide here a few examples which we expect to be particularly relevant to the FinTechs we're speaking to today. The main point to bear in mind with these is that they can be very broad in scope. For example, money remittance can cover effectively all types of money transfers, which, as I'm sure you know, is a very regular, everyday activity. Other examples which might be of interest are if you are issuing payment cards, if you're providing account information services, which effectively give customers a dashboard that lets them see consolidated account information and lets them access comparison services and other financial advice services. If you're working with merchants to allow them to get paid where they have provided goods or a service, or if you're providing an initiation service that allows payments to be made directly from a bank account rather than by using a card. So those were some of the regulated payment services that sort of bring you within the scope of the regime. And then the next question is, are you doing this as a regular occupation or business activity? And this is something Olivia has already touched on in the sort of wider regulatory framework. But again, the question here is, are you doing the service on an ongoing basis? What is the scope of it? and what proportion is it of your wider business? And the main point with payment services is that all businesses are going to involve payments of some form. In a supermarket, there are payments taking place all the time. So really, what we're interested in here is payment as a service that's being provided. If the payment is just ancillary to a wider business, then that's not going to bring you within the payments regime framework here. It's about the payment itself being what you're offering as a business. So earlier I went through some of the regulated payment services that bring you within the scope of the regime. It's also worth bearing in mind that there's a long list of excluded activities. And so if your business is carrying these out, then you may be able to avoid being caught by the regulatory framework. As you'll see, it's a long list and worth giving careful consideration to separately. But in terms of ones that are particularly relevant for FinTechs and similar companies, if you're involved in payments to other payment services providers or within a settlement or clearing system, so if your company is more involved in the infrastructure behind the scenes side of things, then you might look to be excluded here. If your company acts more as a treasurer to a group, and so it's just making intra-group payments, this might take you outside the scope of the regime. And also, if you're more of a technical service provider, so you're not yourself coming into possession of funds that are being transferred, but you're just providing data services or communication services that someone else in turn is using for payments, then this can take you outside of the scope of the regime. So the final point to consider when you're looking at whether your business might fall within the UK's regulatory services framework is the location of the service. And this is, again, is very similar to what Olivia has talked about when going over regulatory activities more generally. In short, the UK regulation applies to UK entities only. And so here you're looking at where you as a provider are, where is the recipient, and is it actually your regular business to be carrying out the payment service activity in the UK? In terms of working out where something is taking place, the characteristic performance test, which Olivia has already outlined, is the key thing to think about here. So the final point, if you're looking to avoid being caught by the UK regulatory framework, if you're based outside the UK and you're providing services into the UK, that can be fine if you're doing it via the internet. But the point that's worth bearing in mind there is that other jurisdictions are going to have very similar regulation. The EU's regime is extremely similar to the UK's, and so you can't necessarily look to avoid any kind of regulation just by basing yourself outside of the UK. So I think the overall message with payment services and the regulatory perimeter is it's very wide-ranging, it's nuanced, and it's going to take careful consideration when applying it to your business activities. I'll now turn to Wilf, who's going to talk about financial promotions.
Thanks very much, Nick. So I'm going to give a very brief overview of a couple of things you need to consider in the context of advertising and marketing of services and products in the UK. The first regime to consider is the FCA's financial promotion regime, which generally restricts any invitations or inducements to engage in investment activity. It's broader than the regulatory perimeter that Olivia talked about, so it's something you need to consider even if you think what you're doing is going to be unregulated. If you are communicating a financial promotion, there are 3 ways you can do it. The first is get authorised, which is obviously a pretty onerous process and takes a long time. The second is that you can have an existing authorised person approve the promotion on your behalf. And I'll talk about shortly how that is slightly being tightened going forward. And the third is utilising one of the many exemptions that exist for the ability to communicate financial promotions, the most well-known of which are perhaps the communications to high net worth investors and sophisticated investors. So the regime is subject to a few changes that are in the pipeline, which are generally looking to restrict the regime. The first is the existing gateway that allows authorised firms to approve financial promotions by unauthorised persons is being restricted so that the authorised firms themselves have to be approved by the FCA to be able to do that. So it's not just any authorised firm that can now do that, they have to specifically apply to the FCA for the ability to do so, and it remains to be seen how many will want to do that. The second is bringing into the scope of the regime various unregulated crypto products, which would not otherwise be regulated under the regulatory perimeter. The third is that the exemptions for high net worth investors and sophisticated investors are being tightened to make it harder to become one such investor, primarily by raising the income threshold that would make you high net worth. And there's a general reclassification of securities that's going to happen, which will restrict, or in some cases outright prohibit, the marketing of some products to retail investors. The other regime to consider is the Advertising Standard Agency, which generally is the independent regulator of advertising in the UK. Now, it's been cracking down recently quite a lot on unregulated products and services, on the advertising of unregulated products and services, such as cryptocurrencies. I'm sure many people have seen stories of Instagram celebrities who've been advertising crypto products, have been subject to fines and censured by the ASA. And they have requirements on what you need to do when advertising these products. There are certain statements you have to make. There are certain ways you have to do it, as shown on the slide. And as I've said, they've been very active on enforcement on this recently, so it's something definitely to bear in mind and that you need to navigate if you're advertising these kinds of products. So it's a very quick look at considerations when advertising or marketing in the UK. As you know, we've heard from Olivia on the regulatory perimeter, Thomas on considerations in respect to products, and Nick on payment services. This is a very whistle-stop tour through various issues to consider. I think we still have time possibly for a couple of questions, but if not, we have a stand over there. We're here all day. If anyone wants to come and talk to us about who we are and what we do, it would be great to speak to you. So if anyone has any questions, I think we've got a couple of minutes that we could answer any. Otherwise, we'll look forward to seeing you later.